Hi, everybody, and welcome back to the oil and gas rundown with us here at King Operating. My name is Rachel Griffith, and I'm a senior vice president here. And today I have, of course, my amazing panel of gentlemen, starting with Jay Young, our CEO and our founder. We have Aaron, our land manager, and today we have Phil, who is one of our geologists with us. So, gentlemen, thank you so much. Of course, I'm going to come to you, Jay. And we're going to start with a little bit of news. Anybody out there, if you're watching us for the first time, please make sure to visit us at kingoperating.com. If you don't know who we are, you're not familiar with what we do, we want to connect with you. You can also put your comments below. Any questions you have, let us hear from you. We would love to get to know you better. So, hey, Jay, how's it going over there?
Hey, it's going great, Rachel. Thank you very much, and I appreciate today. And we have a lot of good news going on today.
Yes, yes, we've got some interesting conversations that we're going to be having. So I just want to start off with talking a little bit about the news and touching on oil prices as they're edging a bit higher today. There's some concerns over Russia and OPEC. So what factors are you watching that could push prices either, further up or further down?
Yeah, it's a good question. And I mean, there's all this talk about OPEC plus. What they want to do is they want to take over market share. So what they're doing is they're flooding the market right now with oil, so oil prices will come down, so we'll quit drilling in the United States. It's the same thing that happened back right before COVID. They were trying to gather market share, so they increased. What they do is they try to keep the shale drillers, SHALE, the big shale, the Wolfcamp shale, the Permian Basin. They try to knock them out and for them to quit drilling, which they've done. Rig count's down 44% in 2 years. So they have increased their productivity, which means that we don't need so much oil and gas from the United States, which means that oil prices come down. Because if oil prices do come down, we don't drill as many wells here in the United States as possible because it costs more money. It costs as much to drill it, and we're not getting as much, and people are like, well, we don't want to do that. So they'll stop drilling for a while, and that's what's happening right now. They're flooding the market with oil to lower prices, so we quit drilling here. But all that's going to do is prevent another cycle. I've seen it for, 4 generations, my entire life. I've seen oil prices go up. I've seen them go down. But overall, oil prices have averaged, 65, 68, I think it's like $68 a barrel for the last 20 years. So it's gone up, it's gone down, it's been over 100, it's been at 20, 30, it's been all over the place, but overall so right now, and it's going against them because oil's up today. So one thing in this business is for sure that you never can predict what oil and gas prices will do. Phil, would you agree with that?
I sure would.
Yeah, I mean,
you're exactly spot on, Jay, on the up and down nature of the oil price.
Yeah. I mean, like right before COVID, they started putting a lot of oil on the markets, OPEC did. And then all of a sudden, because they wanted to oversupply the market and our demand was staying strong. And then remember COVID? Our demand went to zero because nobody was driving, nobody was doing anything. And then all of a sudden, we have this huge demand decrease. So prices went all the way down. It went negative for a little bit. It was kind of crazy. So at that time, then we came back and we started drilling again, and prices kind of evened out. But they're going to be at 65, 70. I mean, it's one thing is that these prices, you never know what's going to happen, except you do know that we're not going to suffer big losses. We're not going to have big gains anymore. I think we're going to be in the $60 to $80 range. And that should be the Aaron, is that what you think? Are you pretty on with that?
Yeah, I mean, I'm hoping we're going to see prices start creeping up into next year. I feel like this is low enough.
Yeah.
We might see them in the short term dip down a little bit into the 50s. I worry a little bit about that, but I really see next year and a half prices going up again.
Yeah. Well, when we quit drilling in the United States, which is what we'll do, and if we have done, is you see that wells decline fast, and if you have no new wells being put online, and if you have the wells that we do have online decline rapidly, we're going to have a shortage in the United States, which is the only thing that's going to happen there is, prices will go up because demand is staying strong. It's going to stay strong for a long period of time. We had an economist, Dan. Oh, what was Dan's name? He said that we'll never have peak demand. We'll never have peak demand, which means that it's going to go over and start going down. He said we're going to have peak demand we're never going to have peak demand for oil. The oil demand will always go up, which I thought was pretty big statement. Pretty big statement. But Phil, you got anything to say about that?
No, Jay, I really don't. I think you've done a great job of explaining the nature of this business and how cyclical it is. And I kind of agree. I do agree with Aaron. I think the oil prices are going to go up some. $70 would be a perfect price for where we should land, and I believe that will happen. Everybody will be in a good mood. You'll still be in a good mood at the pump, and we'll be in a good mood here in exploration as well.
Yeah, and one thing that I didn't mention this, but we're seeing a lot of. We were completing 2 wells right now on the Bivens Ranch, and we're also getting ready to drill 2 more on the Bivens Ranch and drill 5 in Mid-Continent, which I know we're going to talk about in just a minute. But the best thing about all of this is we're seeing prices come down. Prices are coming down for drilling. It's not a one-stop shop. I was talking to somebody not long ago, and they were like, "Well, but prices aren't coming down because you have one guy that's." I said, it's like building a house. When you build a house, you don't call one guy and go, "Hey, come on over and build me a house." No. You got to have a subcontractor. You've got 100, 200 people. You don't want the plumber and the electrician to be the same person. You want to keep those away from each other. Jordan mentioned that on the Jay Young show not long ago, so I thought that was kind of funny. But you don't. You have somebody that does doors, garage doors. You got a roofer. You have all these. Same thing in drilling oil and gas wells. And as we see rig prices coming up and down, and if less people need a rig and that rig's sitting there, or there's 3 rigs sitting in the yard and nobody wants them, man, you can get them for a pretty good price. But if they're being transported around and you're like, okay, well, put me on for 2 months down the road when it comes available out of Amarillo or wherever, and we'll take it. $25,000 a day, great. But if there's 3 sitting in the yard, you may get it for $15,000, $16,000 a day. So that's good. Let's drill wells now at cheaper prices, and let's have the benefits, enjoy the benefits later on about this. So I like that. I like to buy low, sell high. Isn't that what we're supposed to do anyway? Buy low, sell high.
That's definitely the ideal strategy. Absolutely. Buy low, sell high. 100%. That's what we want to be doing.
Yeah. That's
perfect, Jay. Well, this other story, it made me laugh, and it's kind of interesting to think about. It said that there's, the Midland Reporter Telegram reported that there's a new task force in Texas. And I'm going to have to get more information about this. I love Texas. Of course, you would need a task force to go out and check on, incidents in the oil field. And it looks like, there's petroleum theft happening. I am really curious to understand how this would even look. So I don't know, Jay, if you've ever seen this or if any of these guys have ever seen some petroleum theft, but I'm going to do some more research into this. What do you think, Jay?
Well, I hate to say it, but 100%, and I hope none of those people are watching this live. But yeah, you have to see when you're producing oil is going into a big tank. There's 200-300 barrels in this tank. Well, the only person that can come off that is somebody that has a valve that can fit onto the oil and gas truck that you're participating. But if there's a way, these tanks are sitting out there in the middle of nowhere. We don't have cameras on every one. I'm sorry. Maybe I shouldn't say that. Yes, we have cameras on every one. No. but you could siphon out oil out of one of those tanks, and I mean, if there's a way, there's a will, there's a way, right? And you have some people now. If somebody steals, I will say this: if somebody steals a lot of oil off your tank, they can't just go to anywhere and sell that barrel of oil. They can't just go over to Joe's oil and gas company and go, hey, I want to sell this 5 barrels of oil. The first thing they're going to ask you is, okay, well, where'd you get it? And they're going to go, well, I don't know. But there's petroleum products that can be stolen. But there's tank batteries out there. There's meters out there. There's copper. There's all these different products that could be stolen. And yes, if it is stolen, you do call somebody, and we do need our own task force. Just like everybody needs a task force for something, we definitely have one for people stealing things. Phil, have you heard this as well?
Yeah, Jay, I have. In fact, I'm kind of involved in a small oil field northwest of Amarillo is where I live. And I have a small working interest in that. And there was about 8,000 barrels of oil stolen off of that lease in a matter of about 3 months before we actually found out what was going on. And as it turned out, it was another operator from over in a different county. And, they had the wherewithal that they could market that oil because they were an operator. But
Yeah.
yes, it happens.
Yeah. Unbelievable. Terrible. That's exactly what can happen, and you don't know it. Or if it's little bit of oil every day, it's not that big of a deal. If you think, okay, well, and then all of a sudden you have to do the math every month. Okay, how much oil do we have on lease last month, and how much did you produce this month? How much did you sell? What's the inventory at the end? I mean, we try to do checks and balances a lot around it, but it still is. It's still pretty tough. It's still tough to watch everything about that, and we don't have cartels or things like that. Hopefully, knock on wood. No planes landing on lease roads and things like happened in Landman with Billy Bob Thornton. But I mean that you don't want to mess with those people. Some of those people, but fortunately, we don't have to deal with them anytime soon.
Right. Well, talking about some little bit of wild stories. I mean, of course, Texas. I mean, we got the horse thieves, you got the oil thieves. I mean, hey, we just come guns loaded in Texas. So we got to watch out for everything. So, Aaron, this is a little bit up your, up your territory, maybe some of the Wild West stories. And we had you on, before we talked about some of your adventures, some of the things you've done. So we wanted to have you back on because your position is always one that's very interesting. A lot of lore surrounding the landman, a lot of lore. So let's get into this a little bit today. I have a few more questions for you. I know that I definitely came and asked you a lot of questions after the live. So let's break it down. Let's talk about how do you approach a negotiation? With landowners, what do you go in saying? I mean, I know it sounds basic, but give us some step by step. Do you just drive out to someone's property, you give them a call? I mean, what are the things you're saying to them?
Well, most importantly, early on, you want to make sure and gather as much information as you can on that area. If Jay's decided he wanted to go in and drill an area, I want to learn as much about it. And that might even mean driving out there and going to the local coffee shop and talking to some of the lots of times at those coffee shops, that's where you'll find a lot of the ranch owners, and that's what they like to talk about is lease bonuses, who's getting what and what kind of royalty. And when you're talking about negotiating with these mineral owners, there's a lot to an oil and gas lease, but probably two of the main parts of it are the royalty that they're going to get. That's what they want to know about, and also the lease bonus. And you just got to really do your due diligence and know almost what they're expecting to get before I even walk into it. That's a big part of it. And as far as who are the most difficult to deal with or tend to be the most contentious, what I've found in the last, for me, in the last 5 to 10 years, It's the surface owners who don't own any minerals, and they just drive a really hard bargain. I mean, now one thing that is important for people to know, in Texas, the mineral estate is dominant. So the oil and gas companies, we're walking into the negotiation with in a dominant position, but those surface owners can make it really difficult on you. If you go out there and they don't like your operations, they can call the railroad commission. Some of the things they can complaints they could be bogus. They could just be causing trouble for you. So you want to go in there and make those surface owners feel like they're part of the deal, even though, hey, they're not going to get any of the royalty. So you want to make a good deal with them, and that's a good way to deal with some of those contentious surface owners.
So you basically have to navigate the landscape of working with the mineral rights owners and the surface owners, because I mean, that you told me that last time when we were talking that, yeah, a surface owner, he doesn't actually have the dominant rights in that situation, and he could be, looking out his back field, and then all of a sudden you guys are wanting to come drill. So
Right.
have you had a standoff before? Have you had like a long battle, or I call it a battle, but like, where it just delayed a project for a long period of time?
Sure. I mean, I usually figure out a way to get the deal done, but I've definitely dealt with some difficult surface owners. And I don't know if it was you I was talking about, but this was out in Clay County, which is not too far from Wichita Falls. And I knew this guy living on the property owned the minerals too. And it was just a little shack out there. And I had to park my truck, yell, try to get his attention. After about 10 minutes, somebody finally walked out of that house, and he was pretty nice to me at first. And I thought, I'm going to be able to get a deal done with this guy. He told me to come back and talk to him next week, and I did. And when I came out that next week, he had a whole different position. He didn't want me near that land. He wasn't going to lease to us. You do deal with that. That's part of it. I mean, these are lots of times, unless you're in the Barnett Shale and you're driving or drilling under the city of Fort Worth. I mean, you're out in the country and you're dealing with people that are kind of used to getting their way, and I don't know. It's not always easy.
Yeah, definitely. Some people are they're used to their way. I would say that
Right.
there's certain culture in areas. There's certain way of going about things. I'm sure you've run into that, even in certain language. Even
Sure.
just culture is very thick in some places. So I'm sure you've had to navigate many conversations. Have you found that technology has really changed the way that you operate in the last decade?
Sure. When I started about 20 years ago to do my work to determine who owns the minerals and who we need to negotiate a lease with, you had to drive to the courthouse in the county where the lands were located and do a mineral search. And it might take 2 or 3 days. It might take a month. So that was just the way you had to go. And my wife, I wasn't always real happy about it. I'd be driving off to Oklahoma or South Texas and telling her I'd be back in a week or so. She's really happy that the new technology is here, because now I can do those mineral searches online for the most part, and that has really changed the landman game. Now you still have to send people out to do the work in the courthouse, because the online records I found are never 100% correct. But you can get a lot of the work done. It saves a lot of time, a lot of money. And then if hopefully you have the right people working in the field, and you can just say, hey, we got to search this one owner. I think it's in between this deed and this deed. But the technology, mainly just the internet and the quality of the data that can now be researched, just really changed the game. And also, even what I was talking about earlier about learning about the area, what kind of terms I should be expecting. Well, you had to go to the county, like I said, go to the cafe. Well, now I could get online and find chat rooms that have to do with like specific counties where mineral owners are actually talking to each other. You can kind of go in there and see what kind of lease bonuses they're expecting. So it's really changed. And even mapping. I mean, it's evolving quickly with AI. It's changing the game, but you still got to have the human perspective there to make sure it's 100% correct.
Yep. You're absolutely right. We talked about that. No matter how far technology takes you, there are certain things where you still need human touch. You need conversations. You need an understanding that often only comes in person sometimes. So We know
Definitely.
you've done a great job of that, Aaron. You're an amazing member of our team doing great things here. So kind of shifting over to Phil, we've got Phil, and I know Aaron, you work with the geologists as well, but Phil, today we brought you on to talk about a special project for us, a place that we love, mid-continent in the Anadarko Basin. And so we wanted to bring you on and have you just share with us a little bit more. We've been talking about bivins a lot lately, but we wanted to talk about mid-con. I know this is where you're at. This is your specialty. So maybe just start off by telling us what makes mid-con, what makes it so attractive, to oil and gas operators. Give us a little bit of insight there.
Sure, of course. There's several things. We'll start with that it's a huge area. It covers almost half of Oklahoma, all of the Oklahoma Panhandle, a good portion of the Texas Panhandle, and about a quarter of southwestern Kansas. So it's a big area. You have to deal sometimes with 3 to 4 different state agencies. In Oklahoma, the good thing about working in Oklahoma is there's forced pooling, which in other words, you can only have a minor amount of acreage and be able to go to the commission and get a well drilled. And a lot of times you'll increase that interest. So forced pooling is a good thing. Texas does not have that necessarily. But the other thing is that there's a lot of stacked pay. In other words, in one well bore, frequently you can encounter 3 to 4 different pay zones, or paying formations. There's not as much competition when you compare it to the Permian. The acreage cost typically is much less. I heard recently about a tract over in southeast New Mexico, portion of the Permian, that went for almost $1 million per acre. We don't have that over here. The royalty is typically better, and it's just a really good, a really good place to work.
$1 million.
And the geology's not all that complex. It's there are areas that can be, a little bit complex, but for the most part, it's kind of layer cake geology. All you have to worry about is different depths. A lot of times you have the same rocks that can produce in the deeper part of the areas. You can find those same rocks in the shallow areas, at 6,000 to 8,000 feet, whereas in the deeper part of the Anadarko Basin in western Oklahoma, those rocks are 20,000 feet. So it's just a really good place to work in that respect.
Hey, let me say this real quick, if you don't mind, Rachel, just to kind of start this from the very beginning, is that when the oil and gas companies are built with these two gentlemen here, I mean, this like the geology, which is what Phil Moore does. That's the guy that looks out and says, all right, well, hey, there's a good idea here, and there's some stack pay here. There's some ideas that we have that this is productive, and so he's just looking through, maps and thickness, looking at isopacks or looking at structure maps and looking at, that's kind of his world to see where is oil, is there any oil there, and how much is there, and then what he does, it turns that over and he goes, yep, this is it, and if you drill a well here, you're going to get X, Y, Z. Then he hands it over to an engineer that's not on here, but then an engineer would look at it and look at the numbers with his finance person and go, yep, okay, you drill a well here, and it's like we feel like, and this is one of Phil's projects as well, the Bivens. We feel like if we drill a well there on the Bivens, it's going to cost $10 million. We're going to get 1 million barrels of oil. And so the finance people put that in their calculator and go, okay, that works. That gives you an internal rate of return of X. And then they give it to Aaron and say, Aaron, okay, here it is. Here's the area right here. Go find it. And then Aaron's the one that goes out and talks to the landowners and gets the leases or finds the companies that are being bought out. Well, there's a lot of buyouts that people buy deals in the Permian right now because there is a lot of opportunity, and it's a blanket formation, and it's very, very, very expensive, like $1 million an acre. Where in the Panhandle, you may get it for $300, $500, $1,000 an acre. I mean, a lot less money. I've never heard of $1 million an acre before. That's insane. But those deals work, so you get what you pay for in the oil and gas business. And that's what Phil's doing, is looking for areas that you do get, a good return on your dollars. Like we're spending, $3 million, $4 million, maybe $5 million drilling a well in the Anadarko up the Panhandle, where you're spending 10, 15, or 25 million or so for one well in the Permian. Well, the returns have to be, and that's what I like about it. I like the area because I want to build it up. I want to drill 10, 15, 20 wells. I've told Aaron I need line of sight on 100 locations. Aaron's heard that over and over and over again. Phil, and he calls Phil and says, Phil, I need more locations. Phil goes and does his little circles and finds out where the bubble maps are on all the, and so they collaborate. Then they get the engineer involved to make sure, with the finance guys, to make sure that it's economic and all that. And then Aaron looks for the drill sites, because I would like to have 100 locations, not necessarily leased up right now in the bank, but I want to have line of sight on it. So we're going to get a rig in December, hopefully before December, but December, I never want to come off of it. And I think we could drill 15 wells, 20 wells a year. Well, let's get 2 rigs. The more wells you drill, the more money you're going to make. The more money you put into it, the more money you're going to make. So we have a deal at King that we're working on. It's a $3 billion by 2028, $3 billion company by 2028. Well, the MidCon is going to be $500 million or $1 billion. It's going to be, how do we put money into it? How much money do we have to put into it? And we're working with engineers on that to get to that level, because there are great projects out there, and it does take great people like Phil to look for it, to get it started. He's the optimist. He's got to be the optimist and think, okay, where is it? I like it. Here it is. And then don't go over here, but over here is a really great place to drill, especially in the Mid-Continent. I like it because it's not as expensive as the Permian from 3 standpoints. Leasehold, drilling, you don't get as much oil, okay? But it's okay because it's still economic. You make some really great economic returns there. We have line of sight on 100 locations. We drill 30, 40, turn this over to an oil and gas company and say, hey, here's another 50, 60 locations that you can drill in the future. We'll sell that for a really good return for our clients. So I didn't mean to jump in, Rachel. We didn't talk about this before, but I wanted to kind of talk about just the geology, engineering, and land and finance, and kind of how the oil and gas company is put together, and what we've prided ourselves in the last couple of years by including more people and better people on our teams.
Yeah, well, my favorite part was you've got, Aaron, then Phil, then the engineer. So I love that. Jay, you got everybody running around like in a nice wheel of motion, got all the team activated, as I would say.
Hey, Phil wanted to say something right there. What were you going to say?
Yeah, one other thing that I like about the Mid-Continent, Jay, is that the infrastructure is just, it's covered.
Yeah.
You can drill a well, and complete it, and almost the next day you can put gas into the line and oil into the tanks. It's just, almost immediately. Now, there's areas that's not that way. Bivens Ranch, for one, it's not near as mature area over there. But this, by and large, the remainder of the Mid-Continent's pretty mature. It's got pipelines all over the place, and those pipelines are begging for gas right now. They're empty or pretty close to it. So,
very true. That's exactly what I said this morning in our meeting, right, Phil? I was like, okay, let's get Mid-Continent going, because we may have some gas that we can't produce immediately. And Bivens Ranch it's out in the middle. It's a ranch out in the middle of, where Phil lives, northwest Amarillo, but it's way out here. But I like Mid-Continent because you can drill one well. It takes you 2-3 weeks. Then you can drill the next well, and as you're drilling that next well, you can put that one online and just keep going over and over and over again. Keep one rig running, and then we're going to get 2 rigs. Aaron, it's going to be busy. It's going to be busy. So Aaron's going to be really You thought Aaron had hair before. He's no.
Well,
Oh,
it'll turn
no,
gray. It'll turn gray.
Whoa. Hey. Okay. Sorry about that.
Oh no, Aaron. Oh no. You're gonna be like the rest of the crew, Aaron.
I know.
You thought I may
okay.
look like Aaron next year.
You might.
I know.
Oh my God. Well, I love that, you guys. And Phil, I love what you said. Those pipelines are begging for some gas, huh?
Right.
All right, baby, we coming.
There you
All
go.
right, Jay, we coming.
Drill, baby,
100%.
I
drill.
love it.
Absolutely.
I love it so much. Jay, anything else you want to add? Gentlemen, anything you want to add before we wrap up today?
No, I think that's
No?
about it. I'm excited about the Bivens Ranch and the mid-continent opportunities right now. I'm excited about us all working together, and I've got people looking at projects. $3 billion by 2028, I think, is a really good deal. Trevor Reese Jones did 7 deals, 7 years for $7 billion. I think we could build up 3 assets in 3 years for $3 billion. I don't think it's crazy number, and we have some great partners. As we have here, we have some great partners that are partners of ours that are coming in, which we appreciate that. And we're doing this for the partners, and I want to make this a great project for them and a good rate of return. Of course, now's our busy time where clients can see those tax benefits coming into the year. We have tax benefits and also monthly income while we scale the investment, and we do something different than everybody else in the industry that does business like we do, which is scale it and sell it. We have those face masks somewhere. During COVID, I made these. We trademarked scale it and sell it, and I had the face mask. I got to ask Laura where we had those. I mean, not that we're going to wear a face mask anymore, but we did have them. We did have them, scale it and sell it. But that's what we do different than everybody else. But thanks, Rachel. Great job today.
And you know what? If you guys want more information, of course, visit us at kingoperating.com. Find us there. Send us an email. Make sure you put your comments below, and we'll get back to you. Also, check out the book that Jay wrote on the upside of oil and gas investing, published by Forbes Books. So this explains more about what we do here at King Operating. If you're an accredited investor and you're looking to get into the energy industry, you're looking for some great tax savings, like Jay said, awesome cash flow, and to be a part of a team that is helping build something and give you an amazing return on your capital, then definitely connect with us today.
Yeah,
all right, Jay.
Yeah, and if you're one of the next, I was gonna say, if you're one of the next 5 people that go on, if you're qualified, if you're one of the next 5 people that goes onto our website and you fill out the questionnaire, I'll be glad to send you an autographed copy of my book. So
absolutely,
100%.
You heard it from Jay. So jump on there, make sure you fill that out and get your signed copy. You're gonna want one. All right, you guys. Thank you so much, everybody, for joining us. And make sure to come back here same time next week, every Wednesday, for the Oil and Gas Rundown. We will see you then.